Let me now bring on board Mr. U.R. Butt, Managing Director with Dalton Cap Advisors. Morning, Mr. Butt. What a delight to have you back. What do you make of the recent market rally? Is it pure liquidity and nothing else?
Quite largely liquidity, because since the beginning of this year, we've got something like about $4 billion of FII money coming in the cash market. Plus, of course, probably double that amount in the debt market. So therefore, all this has contributed to the almost about 25% movement in dollar terms year to date as far as the market is concerned. But we really have to see how things shape up, because there is, of course, this interlude between now and the election results, between a trillion euro being probably pumped in by the end of this month in Europe. All these things are very important events which will give direction to the market. But from now till the end of the month, I think there would be a lull, and that is when we have to really see whether the market can sustain at these levels, unless, of course, money keeps pouring in. Emerging markets have been recipients of quite some money over the last few weeks, and so that's what's keeping the market momentum high. But I think at 5,400 or thereabouts, valuation really is not on our side anymore. So therefore, we really have to see which way the market will go based on further news flow that we get from within India and outside.
So, Mr. Bhatt, what is your sense? From now up until the budget, do you think the market is going to sort of linger around in the congestion zone of 5,400 on the top and 5,000, and then perhaps, based on the fact as to what may be the outcome of the budget as well as the elections, and then take a, figurative sort of direction from here onwards?
The direction could be, of course, as far as the flow of money from FIIs is concerned, with €1 trillion being pumped in probably by the end of February 29th to European banks. That could actually get some sort of a risk trade on, and India could be a recipient of a good amount of inflows. So that is one thing that could take the market up post February 29th. In addition, of course, the election results, the market seems to be discounting the fact that the election results will be good for the central the party in power, and whatever there would be some sort of a political realignment, and the budget would be something very conducive to market sentiment. So all these are already in the price, and if there is any disappointment on any of these, I think the market could come down. But I don't expect it to really crash too much. It will probably be in that, as you said, a congestion zone of 52, 5,400 in that region.
Do you see 5,000 is now a serious base for Indian markets?
Well, I think just under 5,200 is where the 200-day moving average is, and that would be quite a support for, in the short term, at least for the market. What's
been your portfolio strategy this year? Are you buying? Are you selling?
Well, we need to be invested, so therefore we are invested. But whenever we think that markets are sort of poised for a potential correction, we buy protection.
Right now, are you buying protection?
Well, I think that's always essential to have some protection.
So you're not bullish. You are careful. You are optimist, but you are not ready to commit money at these levels.
Not really. I think if you're invested quite substantially, I think you should keep some protection in hand and wait for the next big event, which, in my view, would be the funding of European banks with another €1 trillion end of February.
Mr. Bhatt, how have you read into earnings so far, and more importantly, PSU banks, because the asset quality concerns, I mean, that's exactly what we saw with SBI. Well, the top line as well as the PAT actually matched up or even beat street estimates. Asset quality concerns still linger on.
Well, I think my view is that the December quarter, or possibly at best the March quarter, would be the worst for asset quality as far as Indian banks are concerned. And markets being what they are, they should sort of look ahead and see, ahead of that. And so therefore I think markets have given banks some sort of correction over the last few months, and I think the worst is probably somewhere we are close to the worst, or probably it's almost behind us. And I think this is the time for us to take a call on banks, and things should look, I mean, if the growth in FY13 is going to be better than the 7% that we are expecting this year, I think banks will have a very important role to play. And if they put their house in order in terms of clearing up NPAs, I think that is one sort of sector where there could be some money to be made in FY13.
So would it be the larger ones to clean up their act first, or do you think there are some smaller pockets wherein the valuations as well as the asset quality concerns are a little less?
Well, I think both. If you are a very large fund, of course, you really have to take big bets on the bigger ones. But I think if you can really do some cherry picking, I think there are quite a lot of smaller banks which have sort of managed to keep the NPA problem at bay. They are the ones I think one should probably look at it if you are a stock picker.
Do you think the flow of liquidity will make life easy for some key companies which currently need money, which have a huge debt burden, some asset owners, some of the power companies, some of the construction companies, because more liquidity means they can refinance their balance sheet, and if they're able to refinance their balance sheet, their profitability ratios will improve?
Well, that's indeed a fact, but the point is that finally policy has to facilitate, generating interest in those companies. If the policy framework still is not conducive for these companies to really make an impact in terms of implementing the projects or investing in new projects, then I don't think money is really going to find its way into these companies. But if we have the right policy flip, come middle of March, then I think these are the companies that probably gain by the inflow of new capital into the country.
Is the current market condition reminiscent of what we saw in the second half of 2008, where the dog was not wagging the tail, but the tail was wagging the dog? Currently, mid-cap stocks are leading the rally and large-cap stocks are following the path?
Yeah, it's almost comparable to that. I think there's a lot of hope with the market at current levels. As I said, based on some sort of solution coming into Europe, which is certainly going to offer quite a lot of volatility to market, because it is not going to be a one-way street, whether it's Europe or whether it's US. But if you see the streets of Athens are anything to go by, I think there will be lots of problems in terms of implementation of all the sort of measures that are being sort of passed, being legislated. So I think all these concerns would be very much there, and therefore it will result in huge amounts of volatility. But the short point now is that there is a lot of expectation of solutions being found, whether it is in Europe, whether it is in the policy making framework in India, and all these are factored in the price. And I don't think there is too much of scope for disappointment as far as the market is concerned.
So from a one-year time horizon, Mr. Bhatt, where is it that you would want to park some money in your personal portfolio?
Well, I think banking is one sector, because I expect that, as I said, March quarter should be the worst. After that, things should start looking up in banks. Second would be even the beaten down infrastructure sort of stocks, where we expect that the government will do something in terms of the raw material sort of availability and land and stuff like that. I think some sort of policy thrust, if it comes within the budget or after the elections, as it were, then I think these are the sort of stocks that can really give you phenomenal returns.
How do you see consumers moving now for the rest of the year? Consumers are expensive. They tend to outperform when market conditions are choppy. They tend to underperform when market conditions are solid.
Well, they've had a fantastic sort of innings for the last few months, and if our bet is that something will happen in terms of the policy framework, in terms of finding a solution in Europe, which I think are reasonable bets to take now, then I think one should sort of get out of these sectors and get into those sectors which are likely to benefit from this inflow of money that is expected sometime in March.
So sell ITC, sell HUL, sell Asian Paints?
Well, I think sector-wise, I think that's the stance one should take.
What will happen to metals when all central bankers are pumping in money?
Well, finally, I mean, these are sort of quite speculative sort of sectors, and therefore, if central banks keep pumping in money, I think they will certainly show up there. Plus, one, I think, additional point that India needs to be concerned about is, where oil is heading. If it is heading, nearer the $120 mark per barrel, I think India is going to be in some sort of the balance of payments position is going to be getting worse. And tensions in the Straits of Hormuz are increasing, if anything. So therefore, I think that is a big if, and that's a big question mark as far as India's current account position and balance of payment position are concerned.